All right. Good evening, everyone, and welcome to the Adams Brothers Podcast. It's a beautiful afternoon here, Thursday afternoon here in South Florida. I'd like to welcome you all to the hottest podcast in the Tri-County area here of South Florida, Dade Brown and Palm Beach County, the Adams Brothers Podcast. We are joined here this afternoon. Again. He's coming back again with us again. And his name is Mr. Praveen Bisundial. And he is going to be talking about investments, insurance, estate planning, and recruiting. We had him on a few months ago, and he's back again to help educate us. And if you need his services, he'll be more than happy to assist you. So, Praveen, welcome back to the Adams Brothers Podcast.
Appreciate it, guys. Appreciate it.
Super excited. Like I said, thank you. It was last year since we saw you the last time.
I think around October.
This is a new year.
Yes, sir.
Yeah.
So happy new year and welcome back. We haven't seen you since last year.
Same to you, fellas. Same to you guys. I appreciate it.
Yeah. So we got you back here. And last time you were here, we were, asking a whole lot of questions back and forth. So this time, I understand that you have a more of like a presentation that you would like to present to our viewers, and we can just hop in as we go along. And if anybody out there in Facebook and YouTube land that's watching, and if you have any questions, you can always put those questions in the chat, and we could read them off to Mr. Bisundial. So, Mr. Bisundial, you have the floor.
Appreciate it. Just want to start off by thanking you, gentlemen, for giving me this opportunity. Last time I came on here, it was a blast. And I saw that not only did the community enjoy it as well, too, we started to really get a lot of good questions, a lot of dialogue. And that's the key, right? My main focus, guys, whenever I come on here is to figure out one way or another to bring some type of value to you guys, okay?
Yes.
And a lot of the concepts that I'm going to talk about here tonight, What's interesting about it is that these concepts have been around for years, for decades, okay? The problem is that a lot of times we all go through elementary, middle school, high school, college even, and we never really take a class on money and finance. But what's very interesting is that as an adult, right, pretty much once you turn 18 and you start understanding how life works, every decision that you make pretty much has to do with money and finance. So it just kind of blows my mind on how every decision we make as an adult is based off of money and finance. However, we never took a class regarding about money and finance as we were growing up. So how does society expect us to make the best decisions with our money and finance if we never got taught this as we were growing up, right? And that's the biggest problem, which is where I understand and I feel most people struggle in everyday life doesn't come from the fact that they're not making enough or saving enough. It comes from the fact of the education and the literacy that people have when it comes to finances, right? Because in my experience, when you feel comfortable with something and you understand how it works for your benefit, it's so much easier to take advantage. Does that make sense?
Yeah.
Yes.
Today, what I'm going to really focus on doing is I'm going to go over some different concepts with you guys that my company teaches people, okay? But these are general concepts. So whether you come to me to take advantage of what I'm going to teach you here, or you go somewhere else, doesn't matter. The main point is take advantage of what I'm teaching because these are foundationally proven concepts that can help you get to where you want to go long term. Does that make sense?
Yes.
That's the main goal here. All right. So let me share my screen here. I have a presentation here that we're going to go through. Okay. Can you guys see my screen here?
Not yet.
Not yet. It's still have the question mark on our end here.
Hold on. Give me a second. I forgot. I got to click share screen here. Share screen. Then let's go straight to here. Share this. Perfect. You guys should be able to see it now, correct?
Yes, it's up now.
Yeah, here we go.
Amazing. Okay. All right. So for those of you guys never heard of my company name is Primerica. Another name that you could hear it called as is PFS Investments, Primerica Financial Service Investment Corporation. Okay. So just to kind of give you guys a little background on us, for those that never heard of us, we've been around for almost 50 years now, since 1977.
Right.
One of the biggest things that I really enjoyed about the company when I first got involved is the flexibility. Most people want to learn about money and finance, but one of the biggest problems when I talk to people is they don't have time to be able to learn about money and finance, right? So how can you learn when time is already tight? Well, a company offering an opportunity that's flexible is huge. Number two, like I mentioned to you guys earlier, and we spoke about, we all have to make decisions on money and finance. Nobody teaches us this. So Primerica gives you a great opportunity to learn. But here's the flip side to it. If you end up liking what you learn and you like the industry enough, you can actually put yourself in a position to actually take on a career, whether it's part-time, whether it's full-time. You also can open up a business within the industry using Primerica as your backbone. Okay. So that's a little perks that I loved about the company. And just a little bit more about us. Like I said, we've been around for a long time, but we actually went public in 2010. So for those that don't know, we are publicly traded. Okay. So we are listed on the stock market. We are right now one of the largest finance companies in North America. If you guys put together every finance company you've ever heard of, we have more locations and licensed representatives than every finance company put together. We're also in all 50 states. We're also in Puerto Rico, Canada, and Guam as well. Okay. So just for those that never heard of Primerica, this is a little background on us so you understand how big of a company we are, not a little small mom and pop shop where my office is located in Miami Lakes. Okay. We have multiple offices all over the country. Okay. So now, very simple. What is our goal? Our goal whenever we sit with people is to look at multiple areas of their finances. Most advisors, when you come across the average advisor, typically most of them focus on one area, which is financial independence, helping people retire, create wealth, right? The problem becomes is that if people are not making enough money, if you're not saving in the other areas of personal finance, if you're not paying off debt, right? How do we free up the most amount of money to invest for your future? It becomes very difficult. So this is where we look to tackle everything, because the more we can free up in other areas of personal finance, the more we can help you invest for your future. And one of the main things that we do is we help people make more money. So many people today, and I may be talking to you guys out there in the audience, but so many people today are living paycheck to paycheck or relying on their credit cards as their savings. Nobody can get ahead if that's your situation. So this is where we offer the opportunity to learn about money and finance, but then teach other people and make an extra $1,000 to $3,000 a month part-time teaching people what we're teaching you. So it becomes a cyclical movement now. Okay.
Okay.
And guess what? I always ask people this question, guys. Does everyone need what we do? Absolutely. Right. When I talk to people, out of every 10 people I talk to, 9 out of 10 will say everything that you see on the screen here is needed for the community. Problem is who do you talk to that you like and trust to get this information from? Okay. And that's where we come into play. So now, just a little bit more about Primerica. If you've never heard of us, the best way to look at us is we are basically like the Foot Locker of finance. Okay. For those that don't understand that comparison, okay, when you go to Foot Locker, what can you get? You
Shoes.
Can get, and you can pretty much get anything sports related. Exactly. So just like you gentlemen said, shoes, you can get apparel, you can get hats, you can get socks, anything sports related. Okay. But here's the extension. You can also get different brands. You, Wayne, may like Nike. Daryl, you may like Adidas. Praveen over here may like Under Armour. Can we all go to Foot Locker and still purchase? Absolutely, because everything is customizable now. So same thing with Primerica. Just like you see on the screen here, sorry about that real quick. We are in 6 different industries under the finance umbrella. So you have life insurance, you have mortgages, you have investments, estate planning, wills, living wills, power of attorneys, you have auto and home, which is just like when you go to Foot Locker, being able to get multiple products. With the extension to that, every company that you guys see on the screen here, this is a partner to Primerica, and Primerica is a partner to them. So just like how when you go to Foot Locker, you may like Nike, Daryl, you may like Adidas. Guess what? Both of you guys can still buy. Same thing. You as a client may like Fidelity. Maybe the next client I sit with, Fidelity is not suited for them, but Invesco is. Now, just like how Foot Locker can tackle both clients, I get to help both individuals now. Does that make sense?
Makes
Yes.
sense.
Everything is customizable, but it also now is unlimited in terms of who I can outreach to. Okay. So this is where it becomes a win-win. All right.
Mhm.
And like Daryl and Wayne said, guys, if you guys have any questions, I'm available. Okay. My number is going to be listed on this post here. You guys also comment in the comment bar as well, too. The goal is to get you guys enough information where you guys feel comfortable and wanting to learn more. That's ultimately the goal.
Yeah.
Perfect. So now, the first area that we teach people about is investments. Okay. Everybody wants to learn about investments and how to have their money work for them. This rule right here is the foundation to understanding investments and how to have your money work for you. Most of the time when I sit with people, most people never heard about this rule before. Basically, what the rule states is you take the number 72 and you divide it into whatever interest rate you're getting, and it tells you how quickly your money doubles. So this interest rate could be on an asset, but it could also be on a liability. Meaning that if you got a 1% interest rate, whether it's on an asset or a liability, your money doubles every 72 years. If you got a 4% interest rate, whether it's on an asset or a liability, your money doubles every 18 years. At 12%, it doubles every 6 years. When you ask the average person which would they prefer to have, everybody would say 12%. The problem is that most people have their money in savings accounts, banks, high yield savings, under the mattress, right? In the sock drawers. I know I'm talking to some of you guys out there right now. Okay.
Yes, me, one of them. Some of it.
The problem is that all those vehicles don't earn more than a 4% return. So if your money is getting 4%, inflation, we all know about inflation, is 4% a year, right? Your money never grows. You just get by. And if your money never grows because it's not beating inflation, number one, but number two, it takes 18 years or longer for it to double. This is why you people can't get ahead. And this is why people are always feeling like they're struggling. Okay. So this is where I sit with people, guys, and I teach them how to get 12% of their money. Because not only does 12% beat inflation annually, but it also now allows you to start getting ahead because now you're growing quicker than the economy and at a quicker pace. Does that make sense?
Yeah.
Yes.
And if you guys want to learn more about this, one of the licenses that I pay for people to get, as long as you can pass a background check, is a Series 6 investment license. This is a federal license that you cannot get anywhere unless a company sponsors you to get it. I'm the only company in the industry that sponsors with no quotas, no commitments, and on a part-time basis where you can take advantage of getting the license to learn. And you can choose if you want to work in the industry or not. It's not mandated, which is very unique. Okay. So with that being said, if you guys don't have any questions, we can then go ahead and move on. Okay.
Yeah, go ahead. We're not yet. Well, I'm taking notes, but go ahead.
Perfect. I love it. Okay. So this, guys, is a live example that I always like to show people to kind of give you guys the understanding of having your money in the bank versus investing it. Okay. And this is a perfect example because you guys are twin brothers as well. Okay. So this is going to go directly to you gentlemen here. All right. I want you to imagine you guys went together to the gas station. Okay. And you guys did a little scratch off and you guys won a total of $50,000. Okay. Now, because Daryl, it was your coin, but Wayne, you're the one that scratched it. You guys say, hey, we must split this 50-50 because it's my coin, but you scratched it. Okay.
Right.
Let's say, hypothetically, we take it back a little bit and you guys go back to age 29, okay? And both of you guys split the 50,000 down the middle, 25,000 each, okay? Daryl, let's say you go to the bank and you keep your 25 grand there. Wayne, let's say you and I sat down and you put your 25,000 in an investment account, okay? This is the numerical side to everything that I just explained. Daryl, you're going to get a 4% return. Wayne, you get 12%. So now this dictates how quickly the money starts to double. Okay. Using that rule 72 at 4%, Daryl, your money doubles every 18 years. Wayne, it doubles every 6. So now let's say you guys go your separate ways and meet back up at 65. Daryl, look how much money you have accumulated at the bank compared to Wayne. Look how much money you have accumulated with the money being invested. Audience, who would you guys prefer to be, Daryl or Wayne?
Brother B.
Brother B, right?
1.6 million.
Yeah.
Exactly. Now, here's the thing that most people don't know, okay? This is how banks, sorry about that, make their money, okay? Banks are in what's called the deposit business. The more money you guys have deposited into your account, the more money a bank can take and now go make money off of it. This is how banks, for every $25,000 a client has saved in their bank account, that is equivalent to a $1.5 million profit, guys, for the actual bank itself, okay? And this is how clients can now come to the bank and get things like what's called a credit card, a loan when we want to buy a house, a loan when we want to buy a car, a loan for a business, right? All these different loans, right? Because the banks make money off of our money, so now they have profits to loan out. And here's the problem, though. When they loan out money, what do they charge you guys?
Interest. Yeah.
Exactly. So you see how it's a big manipulative game that the banks are playing with us, but we never understand it. Nobody ever taught us this, so we never can get out of that rat race. This is why 70% of Americans, guys, between the ages of 30 and 72 will never be able to retire. It's not because people are lazy. I know a lot of you guys out there work very hard. The problem is that most of us don't know how to work smart at the same time as working hard. And that's what I'm here tonight for you guys, to give you guys some education so that way you guys can feel more comfortable, feel more empowered when it comes to financial literacy. So that way you feel more obligated to now take action, so that way you can better your future. Okay. All right. So if no questions off of this here, let's keep it going. Okay.
Yes.
Here's the big problem, like we talked about. Most people have no clue where to go get that 12%, because people will go, hey, Praveen, listen. All right, awesome. 12%. I love that. I love these graphs you're showing me. Everything sounds good. But where do I go to get 12%? So this is where that Series 6 license that I mentioned to you guys earlier comes into place now. This license allows me to legally teach people about these concepts I'm about to teach you here, but it also gives you the inside knowledge on all of these concepts as well, okay? So this is where I teach people, guys, about mutual funds and about stocks, all right? Now, when I ask a person what's a stock, average person can tell me that a stock is a piece of a company. The problem is that when I ask people what a mutual fund is, most people don't know what that is, okay? The best way that I want you guys to look at it is a mutual fund is like you owning a mall. A stock is like you owning one store inside of that mall. If you ask the average person which would they prefer to have, everybody would say they prefer to own the mall versus one store in the mall, okay? So that is the difference between it. A stock is one company. A mutual fund is anywhere between 50 to 200 companies all in one sitting, okay?
Mm-hmm.
Now, mutual funds have been around since 1924, so they have long history. And the reason why we use it, guys, is because they are a vehicle with over 100 years of history that ever since they've been in existence, they have averaged between a 9 to 12% rate of return. So this now goes back to what we were talking about earlier on how do I get 12%? Well, this is how. We use mutual funds, because through mutual funds, now you can get the return you're looking for. You can start to beat inflation, have your money double at a quicker pace than any other vehicle out there. But here's the extension to it. You now get diversification. So now we get to start hedging risk, because that's the one thing most people are concerned about. Well, if I get all these returns, aren't I going to be starting to now put myself in a risky position? Not necessarily. It depends on how diverse you are, okay? Because if you have 50 companies in a bucket versus 200 companies in a bucket, you can still get 12% return on both, but you'll have way more safety in the bucket that has 200 companies than 50 because you're more diversified. Does that make sense?
Yes.
Okay. So that's the key. All right. Number two, it also now depends what broker dealer are you using. Every brokerage that we have access to that is out there in the industry, they have different strategies of professional management, research analysis, and all of that good stuff. So who are you using makes a big difference between your returns and also your risk levels as well. But the number 3 thing, and this is the most important thing that everybody loves about mutual funds, is that they're liquid. If you have real estate and you need money, you cannot sell your real estate overnight and be able to cash out to go cover an emergency. With mutual funds, you can cash out within 24 to 72 hours. Money's wired over to you. So now it gives people that flexibility, like we were talking about earlier, where they can grow their assets, beat inflation, double their money quickly, hedge risk, but now it's also 100% liquid as well too. So these are all the benefits of mutual funds, which is why we offer it. Okay. So now, for those that don't know, mutual funds are used for many different things. Okay. Retirement, those that have a 401k, 403b, any IRAs, college planning, UGMAs, 529s, right? Non-qualified brokerage accounts. These are all different vehicles that you can have a mutual fund inside of. And I kind of just listed all of that there as well too. Okay. So like I said, guys, if you guys have questions, let me know. Okay. I'm available. You guys can reach out. And then if you guys want to learn more about this, you guys can get licensed and learn more about the industry and all these concepts I'm teaching about as well too. Okay.
Mm-hmm.
So I got one quick. How long does it take to get that investment 6 license?
So good question, right? It can take you anywhere between 60 to 90 days.
60 to 90 days.
Yeah, just depending on your study habits and availability to study as well. When I say 60 to 90 days, that's the average person at my agency. And typically, I would say you want to dedicate about an hour a day. If you can dedicate an hour to 2 hours maximum a day, within 60 to 90 days, you can get that license out the way. Very easy. Okay. And now to kind of extend on that, we're partnered with Kaplan University. So those that know Kaplan, a lot of people know Kaplan because they do all the SAT and ACT prep courses. That's who we are partnered with to be able to offer the study programs for people to get the license. Okay. So good question. Any other questions before I move on here?
No.
No? Yeah. So far, so good. Awesome. Okay, great. So that was investments. Okay. So just like I mentioned to you guys in the beginning, Primerica offers a multifaceted platform, which allows you guys to learn about multiple areas under the finance umbrella. So what's cool about that is that was investments. We're going to now talk a little bit about life insurance because this is another product under personal finance that's very popular, number one, but number two, important for people to learn about because it does go hand in hand with building your future as you kind of protect your liabilities. Does that make sense? So it goes hand in hand together. Okay. So what we teach people here at Primerica is this concept, what's called a theory of decreasing responsibility. What that basically means, guys, is that this is how life works. In the early years, right, you need life insurance on yourself to protect your biggest assets and your liabilities in case you pass away too soon. When you're young, you may have kids, you may have debt because of student loans, whatever it is. You may buy a house, so you have a mortgage. So these are all assets and liabilities that are hanging over your head that whether you're young or you're old, if you have this, you need life insurance. Because if you pass away and you don't have life insurance to offset these liabilities, well, guess what? These liabilities now do not turn into assets for your family, or they can sometimes follow your loved ones as well too. So it's very important to have life insurance to make sure you can wipe these things out. Okay. Now, the only reason why you don't need life insurance, because some people don't need it, all right, is if you're self-insured, meaning that you have enough cash stacked away where if something happened to you, all your liabilities can be paid off with the cash that you have stacked away, or you have no liabilities and you have nobody that you love and want to care about after you're here. So there's no need to leave assets behind. Okay. So those are some reasons that people don't need life insurance. But if you're one of these cases that we talked about, you need life insurance. Okay. But now here's the flip side of it. What happens if you make it to retirement? Can anybody retire off insurance? No. Okay. And that's what we all want to get to, which is why we teach people about investments, because if you end up making it to retirement, you want to have a bucket of cash. But if you don't, you want to also make sure everything is taken care of as well. So we teach the concept of having both, having money in case something happens prematurely, but also having money if nothing does. Okay. So now, If you guys want to learn more about life insurance, this is actually the first license that we pay for people to get. This is called the 214 Life and Annuity License. This is a state license. And then once you get this license, that's when you get your Series 6 after, because this license here covers 70% insurance and the other 30% is a foundation to investments, which now the Series 6 cover the remaining partial part of investments. Okay.
Could you repeat that again? 214 life
and annuity.
Life and annuity license. Correct.
Yeah.
Right now, you don't have to get this license through me. You can go to Pearson VUE, which is the company that we're partnered with to offer this course through. You can go to Miami-Dade College, FIU. There's trade companies online that you can find to get these courses through. You can get them outside of me, and then you can come work with me afterwards. However, the pricing is a lot more expensive outside than if you were get it through my university.
Okay? Are these college courses that they will be taking?
No.
Okay.
So these are licenses and certifications to be able to become a financial advisor. So that's a very good question.
Yeah, but I heard you say it's at the college. So I'm thinking maybe that you can get some college credits or towards your college.
So what I was mentioning about colleges is that universities and colleges nowadays are offering these courses separate from their actual university curriculum.
Understood. Go ahead.
So that way they can just generate more revenue.
Okay.
But it costs more if you were to go there than if you were to come through my system. With that being said, with my system, you also get your investment license, where outside you don't. Outside, you can only get the life and annuity license because that's a state license. So with me, I'm actually now able to sponsor the federal one right after you get your state one. Okay. Now, just to kind of piggyback on a question you asked me earlier, Daryl, this license here takes about 7 to 14 days to get. So this license is a lot shorter than the next license, which is why this is the one you get first, but also it's the foundation to the next license. So you get this one first, and then you get the second one. And between both licenses, now you have the credentials under your belt to now become a financial advisor. Okay. And then the only thing that's missing at this point is training. So that way you understand the products, the industry well enough to now bring value to the community. Does that make sense?
Yes.
Okay. Did that answer your question, Daryl?
Yes, it does. Yes. I was just looking at one of the comments. Someone, as soon as I'm licensed, I can offer.
No, the question up to the top at 532. She said, "We got a question real quick." Miss Sakela Holness said, "Why would I be financially responsible for something a family member owed and died?"
That's the way debt works. So debt can be inherited. Now, not necessarily that it goes to your name right off automatically. It's not transferred like that, but debt can be inherited in the sense that when people run your credit, pull up your credit score and whatnot, people, credit companies or companies that are running your credit can see debt that other families have lingering on them that can affect your outcome if you're applying for a loan, a certain credit limit, or whatnot. So that's how it affects other family members and loved ones.
Okay.
Yeah,
so it's not like it automatically transfers over. It's just now kind of a cloud that's just hanging over your head that can be pulled up and popped up anywhere.
Now, so it would automatically transfer over, like if it was a husband and a wife. It would, if the husband passes away, it would go over to the wife.
That's different because now both parties are responsible typically for that one debt, right? So that's a different scenario. But let's say if you're a single person, right, and you pass away, and now one of your nieces are starting to become a young adult, and they want to, let's say, go and apply for a business loan. Guess what? As they're applying, and that company's running their credit history and all these good stuff, someone else's baggage can pop up, and that can affect another individual getting approved the way they want to. Does that make sense? So this is where it's just more helpful long term to kind of make sure all the dust settles versus to have it lingering. It's one of those concepts. Does that make sense?
Yes.
Okay. And if that individual that had that question, if that didn't answer their question, tell them feel free to reach out to me, and I have no problem having a deeper conversation on that.
Okay. Yeah, because she's putting some more comments in there, but we'll have a reach out to you.
Yeah, because if not, I can spend all night here.
Yeah, we want you to finish your presentation.
Exactly.
Yeah.
All right. So that's awesome. Okay. And what's cool about it, again, like I keep reiterating, all right, I don't want anybody to miss this part. If you guys have that interest in learning more, this is why we pay for people to get these licenses. Because the foundation of our company is to stress on education, on financial literacy. So there is no quotas, there is no commitments if you want to get licensed and not necessarily work in the business or work in the industry. You can get it just to learn. Only thing you got to cover is your background check. So as long as you never killed nobody, you never been arrested, DUIs, things like that, you can get licensed. We pay for it. We pay for the courses and everything as long as you can pass a background check. Okay.
Okay.
Awesome. All right. So now with that being said, I'm going to teach a little bit about life insurance here because there's only two options out in the industry and most people get confused between the two. Okay. There's something what's called cash value life insurance out there. And there's another one's called term. We're going to talk about cash value for a second. And then we're going to go over to term. Okay. Most people understand what cash value is. It's life insurance and it's savings combined together. Okay. If you don't understand what cash value life insurance is, this is what it is. It's two products bundled together into one plan. Okay. Now, most people don't recognize it being called cash value. Most people recognize it being called whole life insurance. Excuse me. Universal life insurance, variable life. And then there's another popular one out there today called IULs, Index Universal Life Insurance. Okay. All of them guys, they're the same ballpark, just a different banner. So they all work the same fundamentally, but they just have minor tweaks to it. Okay. So as we all know, guys, life insurance is meant for when you pass away. Savings is meant for when you're alive, right? That's the case. Why does it make sense to bundle the two together into one plan if you can't live and die at the same time? Most people will tell you, so that way, if I pass away, there's money. If I live, there's money. And that logically makes sense. The problem is that 95% of consumers that I sit with that own these products, they have zero clue about the details that come about inside of these policies. The first detail about them is for the first 2 years of the savings component of the plan, you as a client actually lose every dollar in the savings component of the plan for the first 2 years. Now, there's some policies, I've seen it with my own eyes, where you can lose up to 8 years. There's some policies where you only lose the first year. Every policy is different. But for the first couple of years, you don't gain because of surrender charges that the policies hold. Number two is that the rate of return you get inside of the savings is between a 1 to 4% rate of return. Now, if you have your money at the bank earning less than 1, this is a great deal. Can't argue with you there. But now that you guys know about mutual funds where you can get 9 to 12%, is 1 to 4 good now? Not very much, right? Here's the third rule about it. When you combine insurance and savings together, guys, what you end up creating is another product, what's called an annuity, okay? All an annuity is, it's an investment vehicle that's backed by an insurance company, which is exactly how this works. The difference is instead of putting a lump sum, you pay it monthly. All that really means is that when you have an annuity, another word for an annuity is a pension, there's illiquidity, okay? Let me repeat that word again. Illiquidity that comes with it, meaning that your money is not liquid. You cannot touch the money whenever you want. The only way you can ever touch the money that's in the savings component of these plans, guys, is by borrowing it at a 4 to 8% loan rate. That is like saying, Daryl, Adam, right, and Wayne, right? If you guys went to your bank account right now and wanted to take out $100, the only way you can do so is by paying your banking company 104 to 108. How would you guys like to pay interest on your own money?
No, I wouldn't like that.
Nobody would like that. But here's the thing. Nobody knows that that's how this works. The way people think that it works is that, like we said in the beginning, they have money if they die, they have money if they live, but not realizing that if they want to touch the money while they're alive, you can only do it by borrowing it against yourself, okay? And if you don't repay back the loan, guys, within a 365-day calendar period, the company has the right to recharge you the loan rate every annual year. And number two, if you pass away before paying back the loan, the company has the right to deduct the loan amount from your face amount now. So the total amount of coverage, okay? Again, people don't know this. And here's number four. You can't live and die at the same time. What that means is if you end up passing away and your family has $250,000 in coverage on themselves, your family gets the $250,000. But whatever is in the nest egg at, let's say, age 70 for retirement, let's say you die at 69, all 130K that got accumulated goes right back to the company. Your family never gets both. And if you now live past 70, right, meaning you outlive the policy and matures, your family now gets the 130, but now they lose the $250,000. So now they get less than what they actually bought if you outlive the actual policy. Okay.
And this is the cash value?
Cash value policies, correct. And you know what's crazy, Daryl, Wayne, and Wayne, is that all of these rules that I'm talking about here, they're listed in the first 10 pages of every single policy. The problem is that the policies are 500 pages long, and the agents tell you, hide it under your mattress and never look at it. So do people really actually read their policies? Absolutely not.
Not the 500 pages, but Sakela said again, where does the money
go? Yeah.
To the agent and to the company that's selling it to you. That's why agents love selling these policies, because life insurance agents get paid based off of the premiums that the clients are paying. So the first couple of years where there is no money in your savings, that's gone towards fees, surrender charges and fees inside the policies. But it's also how agents get their residual income for the first 2 years. Because agents that sell these policies, just so you guys know, you don't need an investment license to sell these policies. But the extension to that is you can't get residual income off of life insurance. The residual income comes off of the savings. But the only way you can sell savings with life insurance is either two ways. Either one, you have your investment license, which most life insurance agents don't, or you sell these kind of plans, but the clients get screwed. Does that make sense?
Yes.
Okay. And like I said, getting your license allows you to learn more about this. Okay. But this is how Primerica started, guys, 50 years ago, was we created a concept, not a product. Term has been around for just as long as cash value, but we created a concept 50 years ago, what's called BTID. What that stands for, and the best way to look at it, and I use this analogy because it really helps people swallow the understanding behind this, is the difference, guys, between using AirPods versus tangled up headphones that we all hate when the wires get tangled up and it takes 10 years to untangle it just to use. Okay. The wired up tangled headphones is your cash value. What I'm about to explain to you guys right now is your AirPods. Okay. Because when you keep it separate, life is simpler. Okay. Look at the rules. If you compare the rules side by side, when you compare bundling the products together versus keeping life insurance and savings separate, look at the difference. Your savings now has money in the first 2 years. You can get a better return. You never have to borrow your money. And if you pass away, you can inherit now both the insurance and the savings because it's separate. Just like if one ear pod falls off, you can still listen to music because you still have the other one in your ear, right? And then if you end up outliving the policy, you can actually accumulate more in your savings than you do on your insurance because they're both two separate entities now, okay? And this is what it looks like. The same budget that we're dealing with. So I don't increase anybody's budget. Over here, client was still paying $250. With me, you're paying the exact same $250. So no difference in increase. I'm just allocating things differently, just like how Apple allocated the AirPods differently because so many people complained about the wires getting tangled up. Does that make sense?
Yes.
Untangling everything now. Now the client can get $500,000 coverage, guys, for $70 instead of $250,000. And then the difference, let's say we get a 10% return on savings instead of 12. Now at 65, the family can have a lot more accumulated than they are over here on the left side. And at age 70, same thing as well. All along, we can eliminate all the rules that cash value policies have. Okay. So essentially, guys, understand what we do here is the same thing that other companies do, which is offer multiple products. We just structure it differently in a way where the consumer can benefit. Because our belief is through education, through empowerment, and through benefits that you as a consumer can receive, that's how we can grow our company even more, because more people are going to start to feel empowered and comfortable with financial literacy.
Right.
Does
And
that make sense?
yes, it makes sense. And I think I asked you this question the last time, Praveen, about some of the little fine print that most people don't read. It's a lot of words and stuff that you have to read in these policies.
Yeah.
And I mentioned to you about a family member that had some, not a family member, but a friend of ours. Their dad passed away, and I guess he was taking some medication that wasn't prescribed to him, and they didn't pay the policy out because he had some medication in his system that it wasn't illegal drugs, anything, but he had a medication in his system that wasn't prescribed to him, so they denied his policy, you know, and that
That's
family was financially hurt because they had to come out of their pocket with this, and this is why a lot of people don't trust these policies, and you know, and this and that. So that's why a lot of people that we hear the different stories, they don't purchase life insurance.
Yeah,
and they
Daryl, it all depends on the company. It all depends on the company that you're dealing with. A lot of group life insurance companies work the way you just explained. So anybody out there that has coverage only through work, be very, very aware that 99% of group life policies do not get paid out, okay? And if they do, they have a lot of exclusions on how they get paid out, with one of them being group life companies have up to 2 years to pay out a death benefit, okay? A lot of people can't wait 2 years if something happens to their loved one. But that is a very common thing, Daryl, which is why I love representing Primerica, because Primerica has a 94% payout completion ratio within 14 days. The only reason why our payout conversion is not 100% is because sometimes people lie on their applications and there's some investigation that needs to happen. Sometimes clients take too long to get their death certificate. There could be various different reasons, but it's never because of the health scenario where I'll give you an example, right? Let's say, for example, if you are applying for life insurance and you put on your application everything that is true to the best of your knowledge and your health changes later on, Primerica will pay out. Does that make sense?
Yes, it does. And we have one other question here. What happens when someone outlives that term life policy? The price remains the same when you're older?
Yeah, so the good thing about our term policy is that you could actually keep the price the same all the way till age 95. We're the only company that does that. No other company out there that offers a conversion option where you can keep the price the same till age 95, number one. Number two, most companies will have renewal rates. Our renewal rates are 5 to 7 times what you pay now. Most companies are 7 to 10 times. So we beat most traditional companies there. But the real goal, honestly, to answer your question, Wayne, is we don't really strive to teach people to want to have to keep life insurance past 70, because in reality, you want to retire when you're getting into your 70s. The only way for people to retire is you need to have a boatload of cash, right? And so we look at it as, if you had $2, $3, $4 million saved up in cash, number one, you can retire, but number two, now you're self-insured. What that means is that now you don't need to have $500 million in life insurance on yourself, because if you were to pass away, you are leaving your family that $2, $3, $4 million, which is way more money than the $500,000 that you bought. Does that make sense?
Yes.
The concept of life insurance is buying money until you have money. And my question to people is always, why spend more on a liability product than need be? Nobody wants to spend more on a liability product. So why not pay the least amount of money on liabilities and fund the most on assets? So the quicker you can get to your number that you need to get to with assets accumulated, the quicker you can wipe out all liabilities. I tell this to people all the time. Even though I'm offering you a 35-year game plan, if you can hit your goals within 20 years, you can stop your life insurance at year 20. Does that make
Okay.
sense?
Yeah. Has the percentage of people who are purchasing life insurance, has it gone up
Has
or
it
gone
Absolutely.
down?
Yeah, no, it's gone up a lot. It's gone up tremendously since COVID. Before COVID, it was about 42. So the way we look at statistics in the industry is people that are in our target audience, not people in general. So we look at the market of people that are married, people that have kids, homeowners within the age group of at least 18 and 60 and making at least 50K a year, because that's pretty much predominantly the people that are buying life insurance. Prior to COVID, it was about we were at a 42% rate in terms of people in that market buying life insurance. Today, we're up 10%. So it's 52% now.
Okay.
So it's good. It's going up because a lot of people are starting to realize, number one, the importance of it. But number two, the education that we're bringing to the community is starting to get out there tremendously.
Okay.
Because here's another statistic, and I don't mean to cut you, Wayne, real quick. Another statistic is out of the 52% of people, well, back then, 42% that own life insurance, 75% of the 42 own cash value. Today, out of the 52% of people that own life insurance, 70% of them own the cash value. So not only is the cash value ownership going down, but also the increase of life insurance needs is going up, which is a great win for us. And we'll take credit on that as well, too. Okay. So Wayne, you had a question for me?
No, that was Daryl. That was
I didn't mean to cut you off at all. Another question came in that said, my mom had Primerica and after 10 years her premium doubled. Why?
Yeah, so that could be the renewal rates that we were just mentioning, right? So renewal rates can be one of the options or one of the outcomes that can come to place off of a term policy. But that's the reason why you got to get the savings outside of the term, because all term is, guys, it's just insurance by itself, right? You got to understand insurance does not accumulate savings or assets. You got to get the savings on the outside. So that way, at the end of the 10 years, if your policy doubles and you want to keep it, you have the savings to help pay for it, right? But the other option that should have been explained to your mom is she didn't have to convert it into a doubling policy. She didn't have to do that. She could have converted it into what's called a decreasing term, which is what we offer here. And she could have kept the price the same instead of having it double into a renewable term. That makes sense. But if that individual doesn't get access to an agent that knows how to explain that, well, that could be the reason why maybe they didn't get the outcome they're looking for.
And this person said, but you said coverage until 95
right,
doesn't go up.
Right. So you have to convert it after the term is up. So you can buy a 10-year term, you can buy a 15, you can buy a 20, a 25, a 30, or a 35-year term. Okay. So that's the duration that you're originally planning for. Once that term is up, you have the option to convert it to what's called a decreasing term policy that now extends to age 95. But if you don't convert it, it doesn't automatically just transfer to that, because there's multiple options at the end of your term that we don't know if that's what you want.
Okay.
Does that make sense?
Yeah.
Which goes back to now why I said you got to now be able to deal and talk to an agent that knows kind of the whole inside out of how things work, which is where I'm here to help you guys out.
Okay.
Okay.
Yes.
Did that answer you the question?
Yes.
Yeah, that was in the comment section. So yes, go ahead.
Yes.
Like I said, guys, all right, I'm loving these questions. I'm actually a little better when I can interact versus talking the whole time. Like I said, guys, this is what I'm here for. Okay. I'm here to assist the community. You guys can get my number, text me, call me, email me. If you have more questions, we can set up one-on-one meetings. I have no problem answering the gazillion questions you guys have. And I have no problems doing Zoom meetings, one-on-one calls, or whatnot to help you guys feel more empowered with this education. Okay?
Yeah.
Awesome. All right.
Yes.
With that being said, let's just kind of finish up here, because I know you guys have another call we got to get to. This is a problem that happens in most household, guys. Most people, they don't plan to fail. They just fail to plan. Okay. And it's not most people's fault. Most people's scenario looks like this. They're in the middle, and everything regarding personal finance is separated. Most institutions, even if they offer insurance, investments, and multiple products, most institutions do not have one individual taking a look at everything. Most institutions spread everything out to different individuals, which doesn't help the client out. It actually puts the client in a disadvantage because now you as a client, you're in the middle being played tug of war with all the different professionals that you're bouncing around to, meaning that everybody's conversation is different, but nobody knows what the differences are. And this is why most people never get ahead in their finances. With that being said, when you do have questions, most people get a 1-800 number to call. How many people like 1-800 numbers? I can speak from my own experience. I hate them.
Yeah.
I love to have somebody personable that I can text, I can call to answer questions, just like how we are doing today on this meeting. Does that make sense? Imagine if I gave you guys this education and I told you guys, if you have questions, call Primerica's home office in Atlanta, Georgia. Most of you guys will be like, damn, that sucks, right? This is where Praveen comes into place, okay? So now this is where my solution really tackles people's problems. I take a look at everything. And that's what the FNA really helps people do. It stands for Financial Needs Analysis. I sit with you. I give you complimentary plans of a GPS on where you're at, where you want to go. And then the products and services are how to get you guys there, okay? Most advisors, guys, charge between $500 to $1,000 to do these plans for people. The cool thing about the way I work is I don't charge you $500 to $1,000. The way I work is that Primerica pays me to help you, and how you as a client pay me is to give me 5 to 10 referrals to go help other people. And I always ask this question: would you rather pay me $500 to $1,000 to help you get out of the financial struggle you're in? Or would you prefer to give me 5 to 10 names that I can go help out, just like I helped you? What do you guys think the average person says?
Well, they probably gonna do the 5 names.
Referrals, exactly.
Yeah.
Because most people cannot pay money to get help and be told how broke they already are.
Yeah.
You follow? So
Yeah.
people are looking for the way, how can I get help for free? And then how can I just pay this forward? Does that make sense? No
Yes.
gatekeeping over here. Okay. So this is how we can get the best of both worlds, where we help people, but then we also can open up more doors. Okay. So we do everything complimentary. Like I said, it goes to the foundation of our company. Okay. So with that being said, all right, I'm going to kind of just end here. If you guys have any questions, feel free to, how do I unshare my screen here? Stop screen. Okay. Feel free to reach out. Okay. Text me, call me. You guys can email me. All right. Like I said in the beginning, my goal here is to help you guys feel empowered on both sides of the spectrum. Number one, I want you guys to feel more empowered when it comes to financial education. I want you guys to feel more comfortable, take action with your own finances, get organized. It's 2026, right? We're in January, the first month of the year. There's no better time than to get your finances in order than now. Your December version of you will thank the January version of you to get your finances in order now. Does that make sense?
Yes.
And guess what, guys? I know you know what that feels like, because we just passed this. We just left December in the back burner, right?
Yes.
I'm sure a lot of you guys were kicking yourself in December. Man, this was supposed to be my year. Man, I was supposed to get ahead. I was supposed to pay off that debt. I was supposed to start that side hustle. You know what I mean? Buy that house. And I'm sure a lot of you guys can say you didn't get anywhere close to it. Let's make this year different than last year. Let's not repeat the past, okay? So I'm here to help you on that aspect. I'm here to help you guys make more money, create more additional streams of income, and just really, guys, kind of help your river flow a little bit better this year, okay? So with that being said, I appreciate the Adam brothers for having me here. These gentlemen are great individuals to work with. I love working with them. What they're doing for the city of Deerfield is huge. I think it's amazing. The city has never seen something like this. I was born and raised in Miami my whole life. I've never got access to the outreaches that you guys are offering. So I really appreciate it. Kudos to you guys. Let's really help these guys, audience, blow up in Deerfield. Okay.
Absolutely. And give them your address, where you're located, and your,
Social
and your, and
media.
your phone number. And if
Right.
you're on social media, let them know,
Yeah,
because
can
we
I
have some
actually
viewers
post?
watching.
Can I actually post the link here with all of
Yes,
that
put it in
information?
there.
Sure.
Put it in there.
Put it in
Let's
the
do
chat.
that.
Yeah.
I'm gonna actually do this to make you guys' life easier. This
Yes.
is my business page. You guys can check me out on Google. I don't know if you guys can everybody see the link that I just posted? Oh no, I did it in a private chat, it says.
Yeah, I was gonna say we don't see it.
Just
Yeah.
put it in the
How do
comment section.
Oh, comment section. Got you.
Yes.
If you're live, if you're watching live, you could just drop it in the comment, or you could.
Give me 1 second here. YouTube is making me log in. All right, so continue this. Good. All right, so they're having trouble connecting to my YouTube account. Is there another way that I can?
Can you do it on Facebook?
Yeah, let's see.
Yeah.
Is your number 305-282-6565?
Correct.
Okay.
When I click to connect, guys, on the comment, it doesn't give me Facebook as an option. It only gives me YouTube.
Okay.
Yeah, I'm not too sure. But if you guys would like, what I can do is I can send you guys. I'm going to email you guys right now.
Text me the link, and I can put it, whatever you have, text it to me, and I'll copy paste it and put it in the chat right now.
Can I respond to the email that you guys sent me earlier as well?
Or the text thread that we were in earlier. That would be easier.
Okay.
If you put it in that text thread,
yeah,
I can put it right on the screen right away.
I just put your number in the chat. Praveen Bisundial, 305-282-6565.
Yes, sir. Give me 2 seconds. I'm going to send you
take
guys.
your time.
I'm going to text
And
you
we
right
love
now.
we love to have people on here doing financial, whatever. We had one of the young lady that was in the chat, Sakila Wholeness. We had her on here doing financial planning.
Amazing. I love it. I just texted you guys. Yeah.
Okay.
That's my Google page. So if you guys can post my Google page on the chat, you guys can get my number, you guys can get my office address, you guys can get my website, you guys can get everything that you're looking for, my Instagram, my LinkedIn, my Facebook, everything regarding on how to get access to me. You guys can also get a bunch of reviews as well too on other people that have experience dealing with me. I know that's helpful for a lot of people as well too. And like I said, just much appreciated to you guys, Adam Brothers. And let's just keep growing this community.
Oh, yes. We're definitely going to keep doing that.
Absolutely.
And like I say, we're looking forward to when the Park and Rec department get their stuff together. We're looking forward to doing that podcast out there. So
together. Absolutely. So I'm excited to work with you guys more. All right.
Yes. So we've been talking to Praveen Bisundial. He shared some very good information with us here this afternoon. And if you have any questions for Praveen, we put his number in the chat. It's 305-282-6565. If you have any questions, whatsoever, if you'd like to talk to Praveen, you can definitely give him a call, and he'll be sure to answer all of your calls. So, Praveen Bisundial, thank you for joining us here again on the Adams Brothers podcast.
Yes, indeed.
You already know how to reach us. If you want to come back anytime, you have our contact information, and you're welcome to come back anytime. So,
absolutely. All right, gentlemen. Appreciate you.
Thank you, and enjoy the rest of your evening.
Take care. You too.
Everybody stay tuned. We're going to be right back in a few minutes with a pop-up podcast that you don't want to miss. Stay tuned, everybody.